And now let me start by highlighting that blockchain has become a long way since its inception in 2008 as the underlying technology for Bitcoin. But what began as a theoretical concept for cryptocurrency transactions has really evolved into a practical financial tool that's reshaping banking operations. And I want to emphasize that the adoption of blockchain in banking isn't just about cryptocurrency anymore, because we're seeing its implementation and clearance, for example, in settlement and payments and smart contracts, which has effectively revolutionized traditional banking processes. And what I find particularly interesting here is how platforms like, for example, Ripple, have really enabled direct bank-to-bank transfers with complete end-to-end visibility. And this is a significant departure from traditional banking methods. And throughout this lecture, I'll examine various applications of blockchain in banking, and we will understand the implications, and we will explore how they're changing the financial landscape. And I believe this knowledge will be crucial for your future careers in digital finance. First of all, let me walk you through the evolution of blockchain in banking, which I've had the privilege of observing over the past decade, actually. And when blockchain first emerged in 2008, it was primarily conceived as the technology underlying Bitcoin. Now, for example, I remember how skeptical many banking professionals were about its potential applications beyond cryptocurrency. And what is particularly interesting, and I want to emphasize this point, that is how the technology has evolved from being just a cryptocurrency platform to even becoming a transformative force in mainstream banking operations. Well, and now let me share something from my experience. The real game changer came when platforms like Ripple demonstrated how blockchain could facilitate direct bank-to-bank transfers with complete transparency. And this was a watershed moment that opened many eyes in the banking sector. So I've seen firsthand how the adoption of blockchain has revolutionized core banking functions, and we are talking about fundamental changes in clearance and settlement and payments, and even in smart contracts. And these aren't just incremental improvements, so they represent a complete reimagining of how banking operations. And what is really interesting here and excites me most of all is that we are still in the early stages, and the technology still continues to mature, and new applications are being discovered regularly. And now I'd like to draw your attention to the fundamental differences between traditional banking systems and blockchain-based banking systems. Well, in the traditional system that we are all familiar with, actually, banking operations are highly centralized with multiple intermediaries involved in every transaction. And each intermediary maintains their own ledger, which often leads to reconciliation issues and delays. And what fascinates me about the blockchain banking system is that its decentralized nature. Instead of multiple separate ledgers, we have a single distributed ledger that's shared among all participants. And this fundamentally changes how transactions are verified and recorded. And now let me give you a practical example. In traditional banking, when you make an international transfer, your money might pass through, say, 3-4 different banks, each taking time to verify and process the transaction. And with blockchain, this same transaction can be completed nearly instantaneously through direct peer-to-peer transfer. And the implications of this shift are profound because we're seeing reduced costs, faster processing times, enhanced security, and improved transparency. And these benefits are why major banks worldwide are investing heavily in blockchain technology. And I wanted to understand that this isn't just a theoretical comparison, it represents a paradigm shift in how banking services can be delivered and consumed. In this slide, I want to explore the multiple ways blockchain technology is revolutionizing the banking sector. And we will share my insights on the most significant transformations. Well, from my experience working with financial institutions, I can tell you that blockchain's impact extends far beyond just cryptocurrency transactions. And what we're seeing is a fundamental restructuring of how banking services are delivered. Let me emphasize this crucial point. Blockchain isn't just enhancing existing banking processes, it's completely transforming them. So you can think about cross-border payments, for example, or securities trading or regulatory compliance. And in my discussions with banking executives, for example, these are consistently highlighted as areas seeing the most dramatic improvements. And what I find particularly here is how blockchain is reducing infrastructure costs. Because, for example, industry analysis suggests that banks could save between $15 up to $20 billion annually just by implementing blockchain in cross-border payments, for example, or in security trading, or in even compliance operations. And hereby, let me give you an example that I have observed before. Transactions that previously took weeks to process are now being completed in hours. And this isn't just an improvement in efficiency, so it's a complete reimagining of how banking services can be delivered, as I said before. And I wanted to understand that these transformations aren't just theoretical possibilities, they are happening right now in banks across the globe. And now let me share with you some real-world examples of how major banks are implementing blockchain technology. Because having worked closely with financial institutions, I've witnessed this transformation firsthand. So I want to, first of all, I want to highlight a particularly impressive case, that is JP Morgan's Interbank Information Network. What is interesting about this case is how it's revolutionized global payment transactions. So you can just imagine processes that used to take weeks are now completed in hours, and this is remarkable improvement. And let me put this into perspective with some numbers that I found quite striking. Based on extensive industry analysis, it's estimated that blockchain implementation could reduce banks' infrastructure cost by, as I said before, 15 up to $20 million per year. And that's a significant saving that directly impact the bottom line. And what I find most of this implementation is how they are eliminating duplication and intermediaries. Because in my experience, for example, this is popularity evident in clearance and settlement process, where the optimization is truly significant. And let me also emphasize something important here. These aren't just pilot projects anymore. We're seeing real, practical applications that are fundamentally changing how banks are. And this technology, of course, has moved beyond the proof of concept stage and is delivered tangible benefits. And I believe this is just the beginning. And now let me address a critical aspect of blockchain implementation in banking, which is the security considerations. In fact, this is an area I've studied extensively, and it presents both opportunities and challenges. First, let me highlight what I consider to be blockchain's primary security advantage. It's decentralized and cryptographic nature. And in my experience, this effectively eliminates single points of failure, making the system inherently more secure. But however, I want to draw your attention to several key challenges that banks must address. For example, complex key management is one that particularly concerns everybody. And for example, I've observed that many security teams struggle with knowledge gaps in their area, which can create vulnerabilities. And let me share something that keeps many banking executives awake at night. I will say, which is the threat of quantum computing. So while it's not an immediate concern, so I believe banks need to prepare for its potential impact on current cryptographic methods. And another challenge I want to emphasize is the risk of 51% attack. That is, while it's relatively rare, but nevertheless, these attacks attempts to alter chain history and demonstrate systemic risks that banks must prepare for. And what's crucial in my view is implementing comprehensive best practices. And these include multi-layered defenses, extensive penetration testing, and air-gap data backups, and also strict key access restrictions. And I've seen this measure significantly reduce security risks when properly implemented. And I cannot stress enough the importance of fostering decentralized participant diversity, because in my experience, for example, this is one of the most effective ways to maintain system integrity. And now let me address one of the most critical challenges in blockchain banking, which is data confidentiality. Well, having worked with numerous banks, I can tell you that this is absolutely crucial for maintaining customer trust and regulatory compliance. And what I want to emphasize first is the fundamental challenge. That is, banks handle extremely sensitive customer information. For example, in my experience, this requires implementing stringent privacy protections that go beyond standard blockchain features. And let me point out a significant concern, which is public blockchains inherently lack confidentiality due to their transparent data distribution. And this is why I always advise banks to carefully consider their blockchain architecture choices. And I'm particularly excited about the advances in privacy enhancing cryptography. And technologies like zero-knowledge proofs, for example, or ring signatures and committed encrypted transactions are, in my view, game changers for maintaining confidentiality while preserving blockchain's benefits. And one solution I've seen work effectively is the use of enterprise blockchains that limit data viewing to sorry, Joseph Daniel, please turn off your mic. Yeah, thank you. And for example, one solution I've seen work effectively is the use of enterprise blockchains that limit data viewing to verified participants only. And this approach, in my experience, strikes a good balance between transparency and privacy. And what I find about these challenges, how it's pushing the boundaries of cryptographic innovation. because banks are essentially having to reinvent how they think about data privacy in a distributed system. And by this slide, I would like to address what I consider one of the most pressing challenges in blockchain banking. This is the issue of interoperability, so-called. From my experience working with various banking systems, this is a critical hurdle we need to overcome. Well, let me start by highlighting the core of the problem. We have diverse blockchain platforms like Ethereum, Hyperledger, Fabric, R3, Corda, and Quorum, for example. Each operate on different consensus mechanisms and using different coding languages. And in my work, I've seen how this diversity creates significant integration challenges. And what I find particularly problematic is the current solution, which is manual reconciliation through trusted intermediaries. And this essentially negates many of the efficiency benefits that blockchain promises. And I'm cautiously optimistic about emergent solutions like, for example, Polkadot and Cosmos, which offer interchain messaging protocols. But however, I must be honest with you, these solutions are still in their early stages and need further development, as to my opinion. And one aspect that particularly concerns me is the increasing complexity of bridge architectures. Because while they are successfully connecting platforms, they are also introducing new layers of complexity that need to be managed properly. And now let me share my insights on a crucial decision that banks face when implementing blockchain, which is choosing between open and closed networks. And this choice, in my experience, fundamentally shapes the entire implementation strategy. Well, let me start with the public permissionless blockchains like Bitcoin, for example. While they offer complete decentralization and transparency, I've observed that they present significant privacy challenges for banking operations. And this is a trade-off that needs careful consideration. And what I find particularly interesting in the trend toward private permissioned blockchains, from my experience working with various banks, I can tell you that these offer better privacy controls and centralization options through the cost of reduced accessibility, for example. And I would like also to highlight an emergent solution that I find promising, which is hybrid blockchains. And these attempt to balance the benefits of both models. And I've seen some successful implementations in practice, for example. And here's an important observation from my years in the field. Most banks ultimately opt for private blockchains. And the reason, which I fully understand, is that they need to control membership while still leveraging security mechanisms like cryptography and consensus protocols. And what is fascinating about this choice is how it reflects the broader tension on banking between innovation and control. And banks must balance the need for technological advancement with their regulatory obligations and security requirements as well. And now I want to discuss what I consider one of the most critical technical challenges on blockchain banking, which is scalability and performance. And having worked with large banking systems, I can tell you this is a make or break issue, I would say. So let me share some numbers that I find particularly concerning. For example, public blockchains typically handle only from 15 up to 45 transactions per second. And from my experience in banking operations, this is woefully inadequate for large volume banking environments. And what I find particularly challenging in this data storage dilemma. So let me explain why this worries me. Expanding block size might seem like an obvious solution, but it becomes and it comes with the significant risk, which is increased centralization. And this goes against one of the blockchain's fundamental principles, for example. But nevertheless, I've observed that this scalability challenge creates a real bottleneck in adoption, because many banks I've worked with are hesitant to fully commit to blockchain implementation precisely because of this performance. Now let me be clear about something I've learned. Solving these scalability issues isn't just about technical improvements, so it requires a careful balance between performance, decentralization, and security, and what we in the industry call the blockchain trilemma. Well, now I would like to address a crucial aspect of blockchain implementation in banking, which is standardization. From my years of experience, I can tell you that this is a fundamental for achieving widespread adoption of the blockchain technology within banking. So let me start with what I see as a core challenge, which is the lack of common standards in blockchain technology. So I witnessed firsthand how fragmented development efforts create significant obstacles to interoperability, security, and even scalability. And what I find encouraging is the convergence we've seen among global regulatory and industry organizations, because and I'm particularly excited about the frameworks being developed that focus on semantics, on data formats and on network interface. And now let me introduce you to one of the most exciting developments in blockchain banking, which is asset tokenization. So from my experience in the field, I believe this is revolutionary, how we think about the asset management and payments. And what exactly is tokenization? So let me explain it in practical terms. It's the digital representation of real-world assets on blockchain. And I've seen this enable truly frictionless exchange in ways that weren't possible before. So let me share some specific areas where I've seen banking experience focus, like, for example, trade finance, securities, syndicated loans, and even property. And the possibilities here are truly transformative, I would say. And what particularly exciting about tokenization are its key benefits, because we're seeing enhanced liquidity through 24/7 trading. And what I find is how it maintains transparency in asset flows while preserving privacy, which is a crucial balance in banking. However, I want to be candid about the challenges, because one of the biggest hurdles I observed is reconciliation of these tokenized ecosystems with legacy content and with reporting mechanism. I would say that it's not a simple. By this slide, I would like to explore how tokenization is revolutionizing the way banks handle assets. So let me explain what this means in practice. In my experience working with the banking systems, I've seen how tokenization experiments are primarily focused on 4 key areas, like trade finance, security, syndicated loans, and property. And these are the areas where we're seeing the most immediate impact. And let me highlight the key benefits that make tokenization particularly attractive. First, it enables 24/7 trading, which dramatically enhances liquidity. And second, it provides unprecedented transparency in asset flows while maintaining essential privacy, which is a crucial balance in banking indeed. And however, I should point out that we are facing some significant challenges here. One of the biggest hurdles I've encountered is the need to reconcile these new tokenized ecosystems with traditional content and reporting systems. It's not as straight forward as it might seem. And looking ahead, I believe the potential impact of this technology is extraordinary. And this implication, because we're not just talking about minor improvements, we are looking at complete reinvention of banking transaction workflows, like, for example, asset custody and how products are accessed. And now let me explain how blockchain technology is transforming a real-time gross settlement system, or RTGS, as we commonly call it in the banking sector. And this is particular because it addresses a long-standing challenge in interbank transfers. So you see, RTGS has been around for decades, handling large interbank fund transfers. While it does complete these transfers instantly, the traditional system has a significant drawback. Because it relies on fragmented transaction steps that often require manual reconciliation. For example, in my years of studying financial systems, this has been a persistent pain point for the banking industry. And what makes blockchain particularly exciting in this context is its innate real-time verification capabilities, because these capabilities allow central banks to do something remarkable. They can, in other words, upgrade the entire RTGS infrastructure to achieve what we call end-to-end straight-through process. Next slide. And now let's talk about one of the most exciting developments in central banking, which is central bank digital currencies, or CBDCs. In my view, this represents a monumental shift in how central banks are approaching blockchain technology, because from what I have observed in recent years, honestly, CBDCs are more than just a digital version of traditional currency. So, because I think they represent a fundamental rethinking of how central banks can leverage blockchain to enhance monetary policy implementation and even financial stability. And what I find particular about the CBDCs is how they bridge the gap between traditional central banking and modern digital finance. And for example, they maintain the trust and stability of central bank money while introducing the efficiency and programmability of blockchain technology. And for example, in my interactions with central bankers worldwide, I've noticed growing interest in CBDCs for several compelling reasons. For example, they offer improved payment system resilience, reduced settlement risk, and enhanced cross-border payment efficiency. Plus, they provide central banks with better visibility to money flows while maintaining appropriate privacy level. Now let me share something critical about trade finance that I've observed throughout my career. And it's still heavily dependent on physical documents like letters of credit, which are unfortunately found, which are unfortunately are left currently to the practice. And this is where blockchain comes in as a game-changing solution. And what excites me most about blockchain in trade finance is how it establishes a shared record of transaction milestones and documentation. Because, for example, all counterparties can now gain real-time visibility into shipment progress and verify authenticity and realize payments with confidence, even. And let me put you into perspective of this process, of this technology, with some numbers. For example, mass adoption of blockchain trade platforms could prevent billions in annual losses that currently occur due to documentation discrepancies. And that's a significant impact on the bottom. And one of the most innovative aspects I've seen is the integration of smart contracts, because this automatically enforces contractual terms with dramatically limits disputes. And furthermore, the enhanced transparency helps banks better identify potential money laundering, for example, and its risks associated with trade flows. And now I would like to compare the traditional trade finance model with its blockchain-based counterpart and show you why I'm convinced that blockchain represents a significant leap forward in this field. In my experience working with trade finance, the traditional model has always been plagued by multiple pain points, like, for example, extensive paperwork, time-consuming manual processes, numerous intermediaries, for example, and each of these factors introduces delays and potential points of failure. And let me walk you through how blockchain transforms this landscape. First, it digitizes all documentation, creating an immutable record that all parties can trust. And second, it enables real-time verification of transactions and also automated compliance checks. And third, it significantly reduces the number of intermediaries needed. Let me share with you a practical example of how blockchain technology can be implemented in the letter of credit process. This prototype architecture here on the slide represents what I consider to be a breakthrough in trade finance digitization. From my experience working with the traditional letters of credit, I know firsthand how complex and time-consuming the process can be. And what you are seeing here is a streamlined blockchain-based approach that fundamentally transforms this process. And let me walk you through the key components of this architecture. And the beauty of the system lies in its ability to connect all participants who might be the importer, exporter, and also their respective banks in a single secure network, of course. And each party has real-time access to the information they need while maintaining an appropriate level of privacy and security. By this, I want to explain why I'm particularly excited about smart contracts in banking. And these self-executing contracts are transforming how we handle complex banking agreements, making manual oversight increasingly obsolete. And let me share the primary applications where I've seen smart contracts make the biggest impact. So they are revolutionizing payments and also trade finance, syndicated loans, bonds, derivatives, and they also revolutionize identity or access management as well. And the scope of the application is truly remarkable. What I find most compelling about smart contracts is their ability to verify conditions digitally and execute automatically. And for example, from my experience working with traditional banking processes, I can tell you that this is a game changer. And no more, for example, waiting for manual verifications or dealing with the intermediary delays is needed. And now let me highlight the three key benefits that make smart contracts particularly valuable in banking. First, they significantly accelerate settlement times. What used to take days now happen in minutes. Second, they provide improved auditability. That is, every action is recorded and traceable. And third, they dramatically reduce disputes. For example, when contracts execute automatically based on predefined conditions, there is less room for disagreement. And now, let me explain why I'm particularly enthusiastic about blockchain's potential in so-called KYC process, or know your customer or know your client. Having worked with the traditional KYC systems, I can tell you that this is an area ripe for innovation. And for example, in my experience, one of the biggest challenges that banks face is the repetitive nature of KYC verification. For example, each bank independently collects and verifies the same customer information, leading to duplication of effort and increased costs. And blockchain fundamentally changes this dynamic. And what excites me most about blockchain-based KYC is its ability to create a shared, immutable record of verified customer identities. And once a customer's identity is verified by one bank, this information can be securely shared with other authorized institutions with the customer's consent. And let me share a striking statistic I've encountered recently. Banks typically spend between $60 million to $500 million annually on KYC compliance. And with blockchain, we are looking at potential cost reductions of up to 50%, along with the significant improvements in verification speed and accuracy. Well, looking at this slide, I want to discuss how blockchain is revolutionizing the syndicated loan market. That is an area where I've seen significant inefficiencies in traditional processes. For example, from my experience working with these syndicated loans within banking, one of the biggest challenges has always been the lengthy settlement times. And traditionally, these complex transactions can take weeks or even months to settle due to the number of parties involved and the amount of manual processing required. Therefore, let me explain why blockchain is such a game changer in this space. For example, by creating a shared transparent ledger that all participants can access, we can eliminate the need for multiple versions of loan documentation and reduce also reconciliation efforts. And this is something I've seen transform settlement times from weeks to days. And what I find particularly impressive is how blockchain improves transparency throughout the entire loan life cycle, because all participants, from lead arrangers to individual lenders, can see the same information in real time. And this significantly reduces communication overhead and also potential misunderstandings. Next slide. Now let me explain why I'm particularly enthusiastic about blockchain's impact on asset management as well, based on my experience in this sector. What I find most revolutionary about blockchain and asset management is how it creates a consolidated tamper-proof ledger. And this ledger becomes your single source of truth for tracking transactions, valuations, and as well as analytics. For example, working with traditional asset management systems, I've never seen such clarity in client position tracking as with implementation of blockchain technology. Let me highlight a crucial advantage of this. That is ownership verification. With blockchain, for example, we can ensure compliance around investment suitability with unprecedented accuracy. And what's particularly valuable is the system's ability to create time-stamped records of threshold breaches, which significantly enhances our government capabilities. And I would also like to emphasize how this technology transforms daily operations, because gone are the days of reconciling multiple databases and dealing with conflicting records. So when all participants work from the same verified ledger, we eliminate countless hours of reconciliation work, and we also reduce the potential for error. Hereby, I would like to share my insights on how blockchain is transforming one of the banking's more challenging areas, like cross-border payments. And this is an area where I've seen significant inefficiencies in traditional systems. Let me paint a picture of the current situation. First of all, traditional cross-border payments typically involve multiple intermediary banks, each adding, for example, their own processing time and fees. And from my experience, this can result in transactions taking days to complete and carrying substantial costs. And what is interesting here, about blockchain in this context, is its ability to create direct payment corridors between banks. And for example, I've seen this reduced transaction time from days to minutes, and cost from dollars to cents even. This is particularly impactful for remittances and for international trade payments. Now let me share with you what I consider one of the blockchain's most valuable features for banks, which is its ability to streamline regulatory compliance. And this is particularly relevant given the extensive documentation and reporting requirement that banks face today. From my experience, I know firsthand how operationally burdensome it can be to fulfill these requirements manually, for example. And what makes blockchain particularly powerful is its ability to establish complete and indelible records with embedded timestamping, for example, providing that compliance controls were followed. And let me highlight something I found about blockchain's impact in transaction transparency. The technology allows us to surface risky behaviors early, which is crucial for compliance. And moreover, it enables dynamic regulatory monitoring, and something that was nearly impossible with traditional. And also, let me walk you through how blockchain technology is revolutionizing risk assessment in banking. Here, I would like to highlight three critical aspects that make this transformation possible. First, I want to emphasize how shared immutable records are fundamentally changing our approach to institutional memory. For example, when all participants have access to the same unalterable historical data, the quality of risk insights improves dramatically. And I've seen this in practice, where banks can now make more informed decisions based on comprehensive and trustworthy historical data. And let me explain how this translates into practical applications. For example, with blockchain, we are seeing a shift towards more sophisticated data-driven decision-making. And for instance, when assessing client risk scores, banks can now utilize automated systems that draw from a broader and more reliable data pool. And I find it particularly how this automation reduces human bias in risk assessment, for example. And the most exciting part, in my view, here is the enhanced transparency in risk management. Because, for example, through blockchain, we can now identify concentrated exposures much earlier and conduct more accurate predictive stress testing, for example, and even better forecast capital adequacy. And for example, from my experience working with financial institutions, I have observed how this transparency has transformed counterparty risk management from a reactive to a proactive. And now I would like to go a little bit deeper into one of the most compelling advantages of blockchain technology, which is its ability to combat fraud in banking operations. And this is something I'm particularly passionate about because as I have witnessed firsthand how traditional banking systems can be vulnerable to various types of fraud. And first of all, let me start by addressing a critical issue, which is internal control gaps. For example, in traditional banking systems, fraudsters often exploit these gaps that arise from fragmented information and access asymmetry. However, with blockchain, we see a fundamental shift here. The technology inherently shrinks these vulnerability surfaces by making any attempted deception immediately detectable through data inconsistencies. And what I find most powerful about blockchain's fraud prevention capabilities is its tamper-proof audit trails. And every transaction is time-stamped and immutable, making it virtually impossible for bad actors to cover these tracks. And I can tell you, for example, from experience that this feature alone has revolutionized how banks approach fraud prevention overall. But something crucial that I would like you to understand. While blockchain significantly enhances fraud prevention, we must remain vigilant about conclusive human-driven fraud. Because this type of fraud, which crosses system boundaries, remains an enterprise risk that requires layered defenses. And that's why I always emphasize the importance of combining blockchain with other security. Now let me share with you what I consider one of the most transformative potential impacts of blockchain technology. That is its ability to promote financial inclusion. The statistics are quite striking. That is, approximately 1.7 billion people worldwide still lack access to basic banking services, despite many of them having mobile phones. What particularly excites me about blockchain in this context is how it's breaking down traditional barriers, because I've observed how blockchain-based financial services are creating new pathways for participation in the banking system by eliminating the need for conventional intermediaries, for example. And this is revolutionary for communities that have historically been excluded from. And now I would like to address what I consider to be the elephant in the room, which is the significant challenges that banks face when implementing blockchain technology. For example, while the benefits are compelling, it's crucial to understand the hurdles we need to overcome. For example, let me start with the technical challenges that I have observed actually in the field. Integration complexity, the major issue, because banks are dealing with legacy systems that weren't designed with the blockchain in mind. And therefore, process reengineering needs are extensive, and we're still grappling with certain limitations in cryptographic algorithms. And for example, I've seen firsthand how platform fragmentation can create serious concerns for banks trying to implement blockchain. And what is particularly challenging here, and what keeps many banking executives awake at nights, is the regulatory uncertainty, especially around crypto assets. But however, it's not all doom and gloom, I would say, because I'm encouraged actually by several factors that are driving adoption forward. First, we're seeing increasing regulatory endorsement of blockchain technology. And this is critical because it provides banks with the confidence they need to move forward with implementation. And additionally, platforms are maturing at an impressive rate, becoming more sophisticated and reliable. And what I find most interesting is how changing customer expectations are pushing banks toward banking and blockchain adoption. And for example, today's customers demand faster, more transparent services. A blockchain is increasingly being seen as the solution to meet these demands. And from my experience working with various financial institutions, I can tell you that success in blockchain implementation often comes down to how well these challenges are anticipated and addressed in the planning phase. Well, before going on, we have a break for 10 minutes. So if you don't mind, so we can make a break. Well, we proceed on. Okay, the next slide. And now let me share my vision of where blockchain technology is taking us in the banking sector. And for example, based on my experience and research, I've identified 6 key transformational areas that I believe will reshape banking as we know it. First, let's talk about optimized data sharing. So what excites me most of all about this is how blockchain enables secure data sharing across different bank departments. And for example, I've seen firsthand how this breaks down traditional silos that have blocked banking operations for decades. And the automation gains are particularly impressive because, for example, in my work with various banks, I've really observed how blockchain can automate numerous manual processes that, say, previously required significant human intervention. And this leads directly to my next point, which is faster settlements. And the impact on transactional processing times is nothing short of revolutionary here. And for example, when it comes to cost reductions, the numbers are compelling. For example, I've analyzed numerous case study of blockchain integration that significantly reduced operational expenses. But what I find even more is how formally siloed processes are becoming integrated. And let me emphasize this final point. Operational viability has been confirmed through numerous consortia pilots. And for example, I've personally reviewed cases where blockchain has proven its worth in payments and in regulatory compliance and trade finance and even in asset tokenization. And the most exciting part is that we are just scratching the surface. So because every week I'm seeing new applications and use cases emerging that suggest we are on the cusp of the fundamental transformation in how banking services are delivered. Next slide. And now I'd like to share some real-world insights about blockchain implementation in banking, drawing from actual case studies I've analyzed. And while I should note that most bank blockchain projects are still in the pilot stages, we are seeing some patterns emerge. So what I find particularly instructive about these case studies is how they're helping us develop best practices in several critical areas. And let me break this down for you. First, we are learning valuable lessons about governance, how to structure decision-making in a decentralized environment. That's it. And the architectural considerations are equally important. And for example, I've observed how different banks are approaching these challenges in innovative ways. And I'm particularly interested in the change management aspects because from my experience working with various institutions, I can tell you that managing the transition to blockchain technology is often as challenging as the technical implementation itself. But what's really catching my attention is how banks are measuring and maximizing their return on investment. And the next slide, and now let me share with you some compelling real-world examples of blockchain implementation in major banks. And these cases are particularly interesting because they show different approaches to blockchain adoption. Let's start with the JP Morgan, which made a significant move on April 12th to 2021. And what I find about this case is their focused approach to improving money transactions. Because, for example, they specifically targeted payment process and verification times for large payments, and the results have been remarkable. And another example is Bank of America, which represents another interesting case study. For example, their involvement with the utility settlement coin, or USC project, particularly caught my attention because from my analysis, this demonstrates how traditional banks are exploring blockchain not just for internal processes, but for industry-wide. And HSBC's case is equally compelling. And I followed their involvement with the TradeLens platform closely, actually. And what makes their approach noteworthy is how they are leveraging blockchain specifically for trade-related operations. And I've observed how this platform is transforming traditional trade processes into more efficient and more transparent operations. And now let's continue sharing more case studies of blockchain implementation in global banking. And these examples demonstrate different approaches to solving specific banking challenges. For example, Citigroup's involvement with the Voltron platform particularly interested me, actually. And for example, from my analysis of their approach, they have focused specifically on securities trading, which represents a significant shift in how these transactions are processed. And what I find compelling about their case is how they are using blockchain to address the complexities of securities market. And for example, the second one is Standard Chartered and its work with the Marco Polo platform, which presents another interesting angle. For example, their focus on trade finance solutions shows how blockchain can transform traditional banking processes. And I have followed their progress closely as well. And what stands out to me is their practical approach to solving real-world trade finance challenges. And another example is DBS Bank's case, which is equally noteworthy, particularly their work within the Partio platform. And what fascinates me about the approach is their focus on supply chain finance. And for example, from my experience analyzing various implementations, their solution demonstrates how blockchain can bridge the gap between financial services and supply chain management. And the key lesson I've drawn from these cases is that successful blockchain implementation often comes from focusing on specific business problems rather than trying to transform everything at once. And each of these banks has found their niche in blockchain application. That's what makes their cases construct. And now let me share with you the final set of compelling case studies that I believe demonstrate the diverse applications of blockchain and global banking. The next one is Commonwealth Bank of Australia's involvement with the Corda platform, which is particularly fascinating. And from my analysis of the implementation, what stands out is their innovative approach to trade finance. And I've closely monitored their progress, and what impresses me most is how they are adapted blockchain technology to meet the specific needs of the Australian market and their international trade operations. And also BNP Paribas case with the WeTrade platform, as to my opinion, offers another interesting perspective. And what I find most compelling about their approach is how they have focused on creating a collaborative trade finance ecosystem. And for example, I've studied their implementation extensively, and their success in bringing together multiple stakeholders on a single platform, as to me, is quite remarkable. And another example is Deutsche Bank's work with Hyperledger Fabric, which presents what I consider a textbook example of enterprise blockchain application, because their focus on creating scalable enterprise solutions, as to my opinion, demonstrates a deep understanding of how blockchain can be adapted for institutional banking. And having analyzed their approach, I'm particularly impressed by how they have managed to balance innovation within the stringent requirements of German banking regulations. And now let me explain why I believe banking consortia are absolutely vital for the future of blockchain in our industry. For example, from my experience, I've observed that collective action is far more effective than individual efforts. And therefore, let's talk about risk pooling first. I've seen how groups like R3 are accelerating blockchain progress by sharing the risks of innovation among multiple participants. And this is crucial because no single bank wants to bear the entire burden of experimental technology development. And what I find particularly valuable about consortia is how they centralize learnings. So you can think of it as a collective knowledge base, for example, because I've participated in several consortium projects where the shared insights have saved individual banks months, if not years, of independent research and development. And the scale advantage is another aspect I'm excited about, because when banks pool their resources, they can implement blockchain solutions at a scale that would be impossible for individual institutions. And I have witnessed firsthand how this collective approach leads to more robust and comprehensive implementations. And here's something that often gets overlooked, like technology access. For example, by participating in consortia, banks can access cutting-edge blockchain technology without making massive proprietary investments. And for example, I've seen smaller banks benefit enormously from this arrangement. And now let me explain why I'm particularly excited about blockchain as a service, or PaaS platforms, and their potential to democratize blockchain adoption in banking. From my experience, I've observed that one of the biggest hurdles to blockchain adoption is the initial investment required. And this is where BaaS comes in, because it's revolutionizing how banks approach blockchain implementation overall. And what I find particularly compelling is how it allows banks to evaluate opportunities without committing to the intensive capital allocation typically associated with full stack enterprise infrastructure development. And now let me share what I've seen in the market. Leading technology vendors are now offering modular solutions that cover everything from payments to smart contracts, decentralized identities, and token issues as well. And what makes this especially attractive is the pay-as-you-go model, because I have worked with banks that have successfully tested complex blockchain applications without having to build everything from scratch. And so you can think of it as a try before you buy approach to blockchain technology. For example, from my observations, this has been particularly valuable for medium-sized banks that want to stay competitive but don't have the resources for large-scale blockchain development. And the beauty of BaaS is that it allows these institutions to start small, test what works for their specific needs, and scale up gradually. And now let me address what I consider to be the critical factors in successful blockchain integration for banks. And based on my experience working with financial institutions, I have identified three key challenges that require careful strategic planning. First, let me talk about what I call the technology familiarity gap. The decentralized nature of blockchain actually represents a fundamental shift from traditional banking systems. And what I have observed is that many banks are struggling with this transition because the methodical approach required is often lacking. And for example, I've seen firsthand how this gap can slow down implementation and create resistance to change. Here's something that particularly concerns me, the issue of platform fragmentation and rework. Because many banks in their rush to show quick returns, for example, are making decisions that could lead to significant problems down the line. And the third aspect, which I believe is absolutely crucial here, relies and relates to governance and innovation. And from my experience, for example, successful blockchain implementation requires a delicate balance. And for example, we need governance protocols and architectural decisions that encourage innovation while maintaining necessary controls. And what I have found actually most effective is establishing flexible framework designs right from the start. Well, now let me summarize the key points we've covered today about blockchain's transformative impact on banking. These takeaways represent what I believe are the most crucial aspects for understanding blockchain's role in modern banking. First and foremost, I want to emphasize how blockchain is revolutionizing basic banking operations. And from my experience, the technology's ability to enable faster, cheaper payments, trading, and compliance through shared ledgers is truly transformative. And let me highlight the practical applications we've discussed. Banks are actively implementing blockchain for clearance, settlement, syndicated loans, and trade finance. However, as I have stressed throughout this lecture, there are unique challenges that need to be addressed, particularly in security, privacy, and integration. And what I find particularly crucial is the role of standardization in ensuring interoperability and scalability of the technology. And we have also explored how emerging central banks' digital currencies are transforming traditional banking operations. And also, I want to emphasize the practical improvements we are seeing. Like, for example, tokenization is streamlining asset management, smart contracts are automating manual processes, and also KYC processes are becoming more efficient. And in my view, One of the most important developments is the rise of the consortium collaboration driven adoption. But remember, as I've stressed today, strategic planning remains critical for harnessing blockchain's full potential while mitigating risks. And these takeaways overall should serve as your foundation for understanding how blockchain is reshaping the banking industry. Well, we have come up to the next quiz. Please read the question and please select the only one answer, which is right as to your opinion. So the question is, decentralization through blockchain reshapes the operating model of banks by enabling peer-to-peer transactions without intermediaries. How can financial institutions best leverage this fundamental shift in architecture? Please select the only one answer and write it down to the chat. So take your time, a couple. Well, so the second answer is right, as you guess. So let's look. No, the answer first is right. So it describes utilizing blockchain's inherent security and transparency attributes while leveraging collaboration for impactful modernization. And the other options represent various risks or incorrect approaches. So let's get back. Yeah, you're still answering. I see. But you have selected to rapidly modernize architecture by interconnecting system across integrate. See, yes, I can guess that this question was a little bit technical, I guess. Therefore, you were confused a little bit. Yeah, that's not a problem, actually. Let's go on. So, and here are a few issues for discussion, but we do not have much time left for that. So I will also provide you with a presentation afterwards, and you can think, and I suggest you to think about this issue after the class. Here is a glossary. Well, if you have any questions, you can write it in the chat.